Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, just 1 second here. I've got to get this sheet lined up pretty easily so I'll be able to show what I'm trying to show here. We are looking right here. As you can see, the NASDAQ is increasing now. We've taken out the last 3 weeks, the last month. We've taken out the June lows right here, right now. That's what's happening, folks. Be really careful here, please, because this is not anything to take, I'm just giving you a heads up what I think that could be possibly happening. I don't know. All I'm saying is that's just possible that maybe this is going to happen. I don't know the answer to that, but when you see something like that, it's usually pretty nasty onto the downside. Okay, now let's move over here to one other thing that I wanted to. I'm just a little bit. I'm a little tiny bit under the weather because of the allergy stuff, but let's move on here for just a second. Here, I want to get this out of the way. I want to show you 1 second. Here's where we are on the daily. Here's where we are now on the Dow Jones. Now this is the Dow Jones futures. Okay, now you can see what we're seeing here right now. Let's just get this up here. Refresh today. There's where we were yesterday. Okay, now look how much we've come from. We're down 1,200 points, folks. That means almost everybody that bought it on this breakout is now losing money. Now, what happens if this gets below here? What are these dudes going to think about? This is really a big deal, folks. That's my 2 cents worth, and I'm sticking to it. All right, now let's move on to one other one that we need to be watching here. Okay, hold on. Where is the shut the front door and raise the rent? Treasury bonds. Give me a second here because I think that's the next one that's going to be in the crosshairs of some of these folks here. So let's move over here. Okay, here's Treasury bonds. Let's get them up here on the 60-minute. And they should be coming down. That's exactly what we had thought. And now, remember, this is a 60-minute chart. And the same thing that works with 60-minute and watching these things is you want to look for 382 retracements in markets. Okay, now we had one this morning. You see this 382 right here? That I believe that was a 382 off of this high right here. If it's not, it was this one. Well, that one might be 50%, but let's just look at that right here. There it is right there. Okay, there it was at 27. It's now down quite a bit. Okay, so that's where we're at. We're at some pretty good support right now. There's a small ABCD here, one a little bit lower, but this is not acting good, folks. These markets are they are what they call accelerating to the downside. Now, there's always a possibility that we could have a rally, and that's something that you want to pay close attention to. Now, I'm going to take just a moment. I had some people that, and hey, listen, I understand. You're bound to throw vegetables and stuff, but throw fresh vegetable at me if you're going to throw anything. Folks, I'm basically a short-term pattern recognition swing trader. And people say that, come into the show. There was a couple people that listened to the show for the first time yesterday, and they came back with a couple of emails saying, you basically just got really lucky. This is where the moving averages have turned. And I said, yeah, sure, that's probably the case. I said, but, I don't use moving averages. And so the answer back, well, you have to do something differently to, get those numbers to line up the way they do. Folks, these numbers are available to everybody. They really are. Let me explain something to you. This is worth the price of admission. Just a second here. Where are we at here in the data? I'm going to show you where the whole pattern thing is here. Okay. here is a floor traders. This is the numbers out of the floor traders handbook. Okay, all we're going to do now, I'm going to take a quick look. This is going to take a few minutes, but if you don't believe this stuff, this is what's in there. It tells you about risk and Fibonacci, harmonic numbers, all this other stuff. But simplicity beats complexity, and that's what I do. I'm a very simple man. I use ABCD. I get a lot of flack. I don't care. It doesn't make any difference, especially at my age. This is from Burton Malkiel. The dude was still alive. He's 96, and he said there's a non-random walk down Wall Street. Well, that was disproved back here in April of 2000 by MIT, Andrew Lowe, as you can see here. Right after this was published, which was April 17th in Business Week magazine, 3 months later they came out with the book, The Non-Random Walk Down Wall Street, that repudiated everything that they said. And what he did was they looked at 800,000 patterns in the stock market over a 30-year period to prove that these things were correct. And what this was Mandelbrot. This is the dude that is the father of fractal analysis. And he said, if the markets are fractal, if we only knew what the seed was. Well, he said the seed was the lightning bolt. And we all know this is ABCD. He called it the lightning bolt. I call it the ABC. Not because I did, because Gartley did, and he knew this back in 1937, okay? This book cost $1,500 in 1937. That's the bull market. That's the bear market. That's the seed. That's all I'm trying to do. And when you add a little bit of this Fibonacci stuff to it, bingo, bango, boombo, you get some numbers that work part of the time. Do they work all the time? Heck no. But let me show you why the markets are non-random. This is the most actively traded thing in the world. This is the euro over a 10-day period, 30-minute chart. Look at these swings. You know, what I did was I put it in like this and say, oh, well, this looks like a cat EKG, get ready to kick the bucket. Well, if you add the ratios to it, bada bing, that's it. Then if you start doing some work yourself and you get home and say, gee, I don't see anything on this thing. Well, guess what, folks? All you have to do is start putting in the ABCD patterns and you can see they're everywhere. Do they work all the time? No, and you don't expect them to work all the time because they can't work all the time. That's the main thing that I wanted to cover here. This is nothing. There's nothing fancy about what I do. I keep it as simple as possible. Yeah, I could add a bunch of stuff to it, but Franks, I just don't do that, folks. So that's basically the bottom line of what we're paying attention here to today. Okay, now I'm looking at this as a possibility. Now I'm just saying this is a possibility that there is a chance that we might be getting ready to see a rally here the last part of the day here. We're at a real critical level here, the NASDAQ has already broken through it, and the others are pretty close to breaking through it too. So we got to be pretty careful to see they're all making new lows as we come into this. You do not want to be long stocks over this weekend, folks. Trust me on that. Because if something bad comes out, it's going to gap down and it's not going to be very pretty. That's the bottom line that you've got to pay very, very close attention to. So please, heed the warning of the old cowboy. Yeah, I might be wrong. I'm wrong often, but never in doubt. But it's better to be out of a market wishing you were in than in a market wishing you were out. That much I know for sure. Okay? So let's remind ourselves, we got 36 seconds here to go, and then we got another section. I want to cover some of the foreign exchange stuff that is going on, and then we'll have Stan Harley coming up here at our break. So we'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this is a euro on an hourly basis. We're looking at that ABCD up here. We're also looking at this on the daily, because what we had done was to take out the old highs back in here. Really didn't mean very much. Now, the ideal sale would have been up here, but we didn't get there. All we did was take that out. And then on the smaller time scale, you'll see we did make the 3-drive pattern. Now, if you look at this, this is the most actively traded thing in the world, just like we talked about when we were looking at those charts. There's your drive 1. Drive 2 is right, drive 2 is going to be right there, and drive 3 was right there. Now you'll notice that each one of these was exactly 1.5 of the previous swing. In other words, this swing was 1.5 of that swing, and this swing is 1.5 of this swing. That's where the harmony comes in, and then we start the move to the downside, and this is what we're looking at right now. If we look at the other side of that, which is the dollar index, we'll just get this up here and take a quick look at it here. And, I know what I have to do today. I got to check something here. Where's the dollar index? It's under D. Stop it there. It should be up pretty good today, and there it is. You can see there's your bottom today in the dollar index. You can see it. There's your ABCD to the downside. I think we better draw that in just so we can see it together. There's your AB leg right here. There's your CD leg right there. And didn't even make it. Wow. That's really bullish. That's much more bullish than what that is bearish. Let's look at this on the daily. There might be something there that is a little more. Yeah, no, it still should have come down more. We just basically took these lows out, and that should have been, wow. The dollar, nothing wrong with the dollar, folks. This thing looks pretty good. Look at this on a larger basis. All we did here was come down to a 50% retracement. Just took out all these stops, stayed there for 2 days, and boy, this is looking pretty pretty stellar in my opinion. So now let's take a look at the British pound, because we were looking to try to get short that up around that 131 and change area. Let's get this up here so we can see it. And here is the British pound. And we'll get this up here. Oh dear, we missed it. That didn't get there at all. We thought we were going to get there to we got almost to the 1.618 at 130.50. I thought on the weekly, folks, if you remember that we were going to get up here to 131.32. All we did was we took out the weekly highs here of last week. We already did that last week, and we've already done it this week. Now we've had an extension up here. But the only other thing that could be causing this would be this move right here, and that didn't even come close to making an ABCD. You see, they both come in at this level, and this was really, really weak. So let's look at this from a 382 standpoint. We're going to get just a 13-minute chart up here and see if we can find a 382. We had a big break. Okay, here's the break. That's a pretty good break. Now we're looking for a 382. Frankly, I don't think we're going to see it, but we'll give it a shot here. There's your high right here, and then you come down and make the low right there, double low. And the number was 301.60, and it got to 301.35, so it missed it quite a bit. And then you can see the 135 pattern, and there's where your 382s are going to come in and help you to get short, because after your 135 pattern, you see that 135, that means look for another rally right there, and that one will be your first 382 retracement almost all the time. And the key word there, folks, is almost. It's never 100%. Never will be, can't, shan't, and will be. Because what it is what it shall be, and what it shall be is what it can be, and what it can be is what it is. In the words of, what was his name? Barney Fife. Those of you that are big fans of, what was that? I can't even remember the name of the show. All right, let's move on here and take a look at the Japanese yen. That's another one we need to look at here. Let's check and see this JBT. This is the one we got the tip on to buy it on a Tuesday, and today's Friday. We did the right thing there. See, we said that there was Tuesday. Yeah, we got the buy right here, and it went up to there, and now look where it is right now, folks. So be neither a tip taker or a tip giver. That's it, and that's the way it should be. Okay, let's move over here and get back to this Japanese yen that we need to look at also. That's a very, very, very important one. Oh boy, we're making new lows now in the Dow Jones again too. Boy, oh boy, shut the front door. This is not looking good, boys and girls. Let's move over. Here's the Japanese yen. We'll look at the Japanese yen on the future side of the trade here. This has got missing data like, let me go to the Forex, folks, because I don't do the futures. I do Forex. Let's get up here. We'll take a quick look at this, and we'll see where we are. Stay tuned, because we've got Stan Harley coming up here in a heartbeat, and he's always got some really good stuff for us. So, and here is the Japanese yen, and to get that going right here. Just, okay, there's the Japanese yen. It's had a pretty good sell-off from that big move. Now, this is they're coming into for some pretty good support here. Let me just refresh this for today. And there's yesterday's low. So you want to check to see if that was a 618 off of the previous high. There it was right there. Now we're getting a good balance. Now here's where the pedal reaches the metal. If this is the high, with this big down move like this, we got to try to find a 382 retracement. Time out, folks. I have to turn off the now let it ring. My alert is going off on the Dow Jones, so it's not a big deal. Okay, let's take a look at this one right here. We're going to do it on the hourly basis. And, well, you don't see here that. Let me refresh all this just to see if we can see, there's the gap down. There's where the big move down. We want to watch the big move down. We want to watch for the first 382 retracement. Yes, Johnny, I see you have your little placard card up, and guess what it does, boys and girls? It went above 382, Johnny. You get a C plus instead of an A today. It went 159, went to 159.50. It just missed the 50%, and then it started to go lower. Now, you notice that we made a lower low here. When you make a lower low, what you should do is recalculate the 382. So you go down, put that in, And there it is right there within 2 or 3 pips. And then over she comes. Now look what's happened now. Made new lows. All right, we got to look at it again. We go from the high right up here. We're going to be doing this all day long next Friday, boys and girls. That's the last of the group of the July day trading things. We'll have some fun. Anyway, that's what we're watching here with the Japanese yen. I had another question about Apple, and I'll bring this up here, and we'll take a quick look at Apple here. A lot of these things have turned big time, folks. Let's get the dollar up. Remember, here's Apple. Well, there's the daily chart, okay? There was the A, B, C, D to the upside. It measured to 232. The high was 237, and now it's trading at 223. And your first major support, folks, this is already through the 382. You can see, look what's happened here. See, we're gap below the 382. Not a good sign. So this is telling you there's trouble in River City, so don't get involved if you can. So stay with us. We got Stan Harley Stock Market Letters in the house.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Without further ado, we have the man who knows what to do, Mr. Stan Harley. What's happening, Bubba?
Mr. Pesavento.
Oh no,
doing
listen.
Awesome. Thank you.
You can call me Your Excellency or something like that. You know, I think Larry would be fine, Stan. After 45 years, I think we're okay. But thank you for the compliment.
Yes, sir. Yes, sir. On my laptop today, I'm having trouble with the camera on my main desktop. Not sure, a loose electron somewhere. But let's just kind of take a look at the market, shall we, and see if we can figure out what the heck is going on here.
Okay, makes sense to me.
First of all, let's take a look at kind of the concept here that I have with analyzing the markets. I'm a pure technician like you, like most of us watching the program. I don't care as far as what are the forces that are pushing the market, the fundamentals, the politics. It doesn't matter. What I want to do is just analyze the price tape and see if I can figure out what the heck is going on. I call that market kinematics. I'm an engineer. We studied kinematics early on in our engineering career, and it's a similar process with the markets. Let's back up a little bit. My big picture of the market. This is my continuing theme. I think we're marching towards what I believe is going to be a major top in November. Everything that I'm looking at, from the yearly data to the monthly data to the weekly data, I have a very compelling, shall we say, compelling clustering the first week in November, right around November 5th to November 12th. Lucas numbers and Fibonacci numbers, which form the crux of my analysis. But I've got a very, very strong clustering of double Lucas counts, both on the monthly charts and, well, on the yearly charts, the monthly, and last but certainly not least, the weekly. This is the weekly chart of the S&P going back about 40 years. And what I've done is I've marked the major highs, and they are separated, as you can see, weekly time counts that are within 2 to 4 of the double Lucas numbers. I've got the table over there on the upper left-hand corner. For example, between the March 24, 2000 high and the October 2007 high, that time period spanned 394 weeks, and good old Lucas 199 times 2 is 398. Clearly that's the operable function. That happened again in this next sequence, and between May of 2015 and Feb of 2020, we were within 2 weeks of exactly 246 weeks, which is Lucas 123 times 2, and so on. So where does the next double clustering occur? Well, it occurs about the second week of November, plus or minus. So what does this tell me? It says to be alert to the potential, not the certainty, never the certainty, of course. But if the history were to repeat, it suggests strongly to me that the second week in November, plus or minus, perhaps a week or two either side, would be the point at which we should be looking for a significant high in the stock market.
Okay, that looks pretty good.
Let's take a look at the daily data. Drill this down a little bit to the present time frame. I ran this off about 25 minutes ago, or maybe 40 minutes ago. This is a chart of the Dow Jones Industrials, and here's what I think is going on. Here's the 40,000 mile barrier, and we saw 3 stabs against that 40,000 line in the sky. The first 2 were failures, and the third broke through. So what's happening right now? A very, very common breakout maneuver. That is to say, after a market, a stock, or an index breaks out against overhead resistance, you get a quick sprint on the breakout, and then you get a pullback to the breakout point. And I think that's exactly what's going on right now. So we're doing a little chop shop right now. We're doing what I call a little bit of exploratory surgery on the downside. I'm looking for support right in the 40,000-ish range. And I think we're going to hit that very, very shortly. And certainly by early next week, I think we'll be done with this, perhaps even sooner. But somewhere between, let's say, maybe Monday morning and maybe earlier in the next couple of days next week, I think we'll do that little structural retest, and then we'll be good to go. And I think we're going to chug along higher. And my target remains much higher highs into early November.
Okay, that sounds pretty good.
Let's
Please
take
continue.
a look at the S&P 500. Somewhat similar pattern, but a little bit more on the upside in terms of pointedness, in terms of slope. This goes back to 2023, and what I've done is I've drawn a trend line which closely approximates a 1-by-1 Gann angle, meaning the rise over the run is approximately equal to 1-to-1. And from the time period between the 2022 bottom into the top in April of this year, we rose at a rate of 1-to-1. Then we pulled back into April the 19th, and then we began the next primary cycle on the upside. And curiously enough, the slope at which the current primary cycle is rising is exactly the same slope as it was in the prior primary cycle. So what I did with these angles, I did collected copy and paste, and oh my gosh, it's precisely the same slope. Very curious. Sometimes it happens that way, sometimes it doesn't, but that's the way it seems to be happening right now. The other thing that I've annotated on the screen here, Larry, is what I call the trading cycles. And trading cycles, they expand and they contract, but nominally over the long haul, they tend to run about 2 months, bottom to bottom, roughly 40 trading days, sometimes less, sometimes more. But over the long haul, and I wrote a detailed analysis in the Journal for the Foundation for the Study of Cycles a couple of years ago on this cycle, and it nominally spans about 40 trading days over the long haul. So every 2 months, roughly. Now, each trading cycle typically has 2 sub-cycles embedded within it, sometimes 3, but 2 is what is normal, and I call each of those sub-cycles A and B, or Alpha and Bravo. And then, as you can see, rising from the April 19th low, we had a trading cycle low on May 31st, and we are in the process of making a second one. And I think coincident with the Dow pulling back and tagging that 40,000 line once again that we showed in the prior chart, I think you'll see the S&P and the rest of the major averages hit their low. I think that's coming very soon in the coming days, and I think that'll flush out everything that needs to be done in terms of overbought and set the technical underpinnings for the next move higher. Wow.
Well, they're sure shaking the tree the last couple of days, that's for sure.
Oh yes, and you know what it is we broke out above that 40,000 line. Now we're pulling back to retest it. That's my view.
Oh well, stay with us, Dan. You got some more for us, correct?
Yes, I'll be with you.
Attaboy, you're my man. Tell the princess I said hi, by the way.
Yeah.
Hey, let's take a break here. We're going to talk to Stan in just a minute. Got to pay a few bills here for the O'Brien clan, and we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, talking to Stan Harley. Please continue, my friend.
Absolutely, Barry. The one index that I think gets woefully inadequate attention is the broadest measure of the stock market, and that is the New York Composite, the NYA. And this index, it reflects all of the stocks traded on the New York Stock Exchange. Curiously, the media pays scant, if any, attention at all to this index.
Then amen to that.
Yeah, why? I don't know, but it really is important. The New York Composite just a couple of days ago made a new all-time high. So to those pundits that want to try to push forth the narrative that the stock market is being held aloft by the Magnificent Seven and nothing more, I say ballyhoo to that. Just look at the NYA index. You can see that it's an across-the-board bull market.
Stan, could you do me a favor when you're done? Send me a copy of that chart to Larry@tradingtutor.com.
Sure, I absolutely will.
Thanks, buddy. I appreciate it. Please continue. I'm sorry for interrupting. I really like to have that chart, though.
My pleasure. Let's kind of do a cyclical analysis. I'm a cycles guy, as you know. That kind of forms the bread and butter of my work. Here is a cycle that I've shared with you and the viewers on the air in the recent past, and here's my updated analysis. The dominant cycle on the chart, going back the last several years, has been 80 trading days, or 53. I talked about that one. They're both related by 3 to 2 or 2 to 3, depending on what you put in the numerator and the denominator. Right now, the 80 is a little bit more prominent, and what I've done here is I've drawn vertical lines equally spaced at 80 trading days, and note how well this picks out all of the highs in the S&P 500. Going back here to the top in 2022, well, we had one prior to that in September 2021, a high in 2022. This is April of 2022. The Dow actually went higher than the S&P here. This is the high that occurred in August, and so on. Once or twice, it does skip a beat. It did here. Cycles do that, and they pick up the beat once again after skipping a beat or two. Very, very common. And what I've done is I put all of these dates into my spreadsheet, and I did a mathematical analysis to find the best fit to the data series, and that's what mathematicians call regression modeling, regression analysis. It's a tool to find the mathematical equation that defines the best fit. And when I turn the crank in the computer, lo and behold, it pops out. It says, wow, we have a cycle here that spans 80 trading days. And the standard deviation on that analysis is 3.29 trading days, which is, wow, very low, very, very low indeed. The analysis pointed to a high in the vicinity of July 18th with a standard deviation of 3.29 trading days. And the actual high, we now know, actually occurred on the 16th, within 2 trading days, certainly within one standard deviation. And we are pulling back. No surprise at all that this cycle came. And when, you might ask, okay, when is the next 80-day cycle going to occur? And I haven't plugged in the 16th yet. It won't change the analysis that much. But prior to the 16th coming in, the analysis pointed to November 8th, 2024, which happens to line up with my weekly, monthly, yearly thinking. So going to be watching that time period right around November 8th, plus or minus. Anything else going on that week you know of?
I don't know of anything. I've talked to some other people about that. I said maybe Stan's doing some astrology work, but November of this year, probably nothing going on in the news, I would guess.
Okay, well, could be. Well, we'll just have to watch and see. But anyway, that's what the math suggests. Time will tell, as they say.
Wow.
Thought we'd take a little departure from the stock market and maybe look at used auto prices. In case one has an interest in buying a used auto as opposed to a new auto. Here's the data going back as far as it's published. This is from the Mannheim database. I have dumped the data into a spreadsheet, analyzed it, and I've looked at the low points, and we very clearly have a cycle of 68 months. It was due right in here. I didn't mark it. I think it probably skipped a beat here, but cycles do that, as you know. It does that with the 80-day cycle. But the analysis, even though it's limited, would suggest we have a 68-month Fibonacci 34 times 2 cycle, low to low, in the data series. Assuming the pattern continues, that would suggest the next low for used auto prices should occur in the vicinity of December 25th, December 2025, about a year and a half from now. So if one happens to be thinking about buying a used car and you can wait for about a year and a half, well, the math would suggest you might get a better price about a year and a half from now.
Wow. That's a beautiful technical chart, though. I see the ABCD pattern in it right now, so that's pretty exciting. Now, is there anything with real estate that you have, Stan? Because, they talk a lot about, commercial real estate stuff.
Real estate, but I didn't bring any charts today to share with the audience.
Okay, that's okay.
So we'll do that next time.
That sounds great. Listen, I want to thank you for. Do you have another one yet, or is that it?
No, that's all I have there. Yeah.
Well, that's enough. That's all we'd like to hear. But thank you so much for the work, and we'll have you on again really soon, Stan. And I mean this sincerely. I certainly appreciate you coming on here because I respect your work as any guest that we have on here. So keep up the good work, my friend. Okay.
Thank you.
All right, buddy. Thank you very much, folks. That's Stan Harley of the Harley Stock Market Letter out of this good state of Virginia, as I recall. Is that correct now?
Indeed. That's where I am.
That's good. All right. Hold it. We got a question, Stan. Hold on just a second. This is question coming in. If we can, just give me, I've just got to find out what it is. And the question is, Jeff is on the line right now from New Jersey. Go ahead, Jeff. Well, looks like, Jeff, are you still there? I think he's hung up, Stan, so we'll catch him next time. Okay, buddy?
Sounds good.
All right, buddy. Thanks a lot. Okay, folks, we're going to continue on in just a minute. I think we've got to pay a few bills. Let's see what the old clock on the wall. We've got a whole minute. That's 2 lifetimes in our business, so hold on, and I will get our charts up so we can take a look at them. We've got a chance here for an end-of-the-day rally, but boy, I'll tell you, I mean, that's a slim chance in my opinion, but here is the screenshot, and there's where we are. Let's get up here for a second, and you'll see here we've had a little tiny bit of a bounce here Dow Jones has made slightly lower lows, you can see here, and I've been watching these 382s, all day long, and that's all it's been able to do is rally 382s. It doesn't look very interesting, of course, at all. So let's take a little break here, and we'll be right back after a few words of our sponsor.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, it's not good to hope for a rally in a market that is down on the week. On a Friday, down substantially on Friday. So hoping for a rally there is a fool's folly. That's my 2 cents worth. Now, next week, we're going to have Jack Hughes on, I believe, in the middle of the week, somewhere around Wednesday or Thursday. We have, oh, my goodness. I don't have anybody scheduled for tomorrow. Well, next week, we have, of course, our live trading thing on Friday. But we'll have some guests. I'll shake the trees here and get some friends in to try to talk to us. Maybe Bill Meridian will come in. Impossible to get in touch with Joe DiNapoli. But these are a few of the things that we're paying close attention to here today. We've got 2 hours to go into the close. I'm expecting the market to actually close near the low of the day because it's a real critical level, folks. We are at 2 standard deviations right now in the NASDAQ, right now. Anything lower than where we are right now at 19,687. If it closes anywhere below that, it's going to be really nasty because, this thing just got so much stuff that's pushing it down that you've got to be really careful here. Because remember, beyond 2 standard deviations is where the option boys are really in big trouble, and that's when selling can really accentuate to the downside. That's my 2 cents worth, and I'm sticking with us. So live every day in that. Let's see how the clock on the wall is. I don't want Al to get mad at me. How much time we got here? I can't even see it. Just a second here. Wow, is that much? We got 49 seconds. I don't know what I can say in 49 seconds. By the way, we're still looking for much lower gold prices, folks. We've broken well over $80 off the high in just 2 days. That tells us that we're most probably heading down to something a little bit lower in the gold and especially silver. It looks like we have a handle of about 26. So live every day in attitude of gratitude, and may God bless.